So this is your May market update. The housing market has reacted to the rising borrowing costs we've experienced over the last couple of months. And what a difference a couple of months makes. Sales are down 38.8% year over year. Active listings are up 26% from last year. And the market is trending towards more of a balanced market with 2.11 months of inventory. Earlier this year, during the peak, we were below half a month of inventory. So as we return towards a balanced market, there's going to be more opportunities. And this is definitely a correction, but it's not a crash. And you need to know the difference. At the peak of the market in February, prices were up 28% year over year. In May, we're only up 9.4% year over year. So you can say that prices have come down almost 19% since the peak. But we all knew that 28% growth is kind of unsustainable. And this is more of a healthy market for everyone. Now, as we trend towards a more of a balanced market, from an ultra seller's market, it's going to take buyers and sellers some time to adjust to the new market conditions. And on June 1st, the Bank of Canada increased the interest rates another 0.5% or 50 basis points. So there's going to be further interest rate increases expected in the coming months because the government is still trying to get that 6.8% inflation under control. Although the housing market is going through some changes in the short term, we should still see a similar trend towards a balanced market as interest rates continue to rise. In the medium term, there's going to be some uncertainty with how much the interest rates will continue to go up, and that might put some buyers on the sidelines. And my long-term outlook on the fundamentals of the market still looks pretty strong. Unemployment rate is still trending low, immigration continues to rise and increase, and the projections for the housing demand is actually lower than what it is in reality. We can see that by the rental rates continuing to rise as people return to office, things are opening up, there's going to be more demand for housing. And the real estate market in the GTA has proven to be a safe and strong investment in the long term. So if we look at kind of the Mississauga average price that has increased over a long period of time, you can see the average price has increased almost 50% in 5 years. And over the last 10 years, prices have increased over 150%. But each housing type and each neighborhood has their own micro market, as we have seen changes across the board. So if you're interested in knowing how your property is doing and how the value has changed, or you want to know what opportunities are out there for a good investment, reach out. I'd love to help, and I would love to be your resource for real estate. Talk to you soon.